Hi traders, it's Zoran Kresovic here again from Eightcap. It's been a few weeks until I've actually last logged in and done trade of the week. We are back here again. It's going to be a busy schedule for this week, and I've got a particular pair that I want to look at this week, and that is gold. So I know a lot of you actually love trading gold in general, and we haven't actually seen as much volatility in gold over the past few weeks, but volatility in general in terms of the FX market as well as market sentiment appears to be elevated at the moment, and it looks like we are actually moving upwards with regards to more volatile period ahead. So how about we actually get started and look at the economic calendar first? That's kind of the way I like to actually play it out, because obviously we are heavily driven by the news sentiment at the moment in relation to inflation, global supply and demand, and everything else that's actually affecting this world. So this week, we've got a key headline or key highlight this Thursday out of the US. We've actually got CPI data, which is probably a key event that's actually on everyone's radar at the moment. We've also got CPI data coming out of China, which is going to be quite a big one as well here, especially in Australia, for Aussie dollar. And we're finishing the week off on Friday with some GDP data out of Great Britain. But let's have a look at the Thursday's key event. So we've got consumer price index, which is obviously measuring the rate of inflation in the US. And given the fact, obviously, Fed is actually coming to the end of the rate cycle, probably, we might still have maybe one, maybe none over the coming months. It will be interesting to see, and all eyes will be on this particular event. So if you have a look at it, CPI year on year, previously at 3%, forecasted to be slightly higher at 3.3%. And then if you have a look at the CPI data on month to month basis, previous month it was actually at 0.2, and there is a forecast to actually be at 0.2 as well. So market is expecting not much change in the consumer price index month on month, and slightly higher year on year, which is kind of expected. So Fed is talking about lifting potentially another 25 basis points in the month of September. Market actually priced that out. Initially it was around 20% chance, then they reduced it to only 12% chance. There is a good opportunity that we might actually see another 25 basis points in the month of November. Now, that's all hindsight. That's all actually looking ahead. But how about we actually get into our trade of the week? What I got here is actually gold. As you can see, gold has been actually on the downward trajectory. So that level of $1,975 has actually provided some resistance over the past few months. And looks like that support level at $1,900 is obviously a huge support level. So what we're actually seeing from around the month of May up to now, we're actually seeing a sideways move in gold. Now, if you have a look at the top of the market, when actually gold reached all-time high in the month or early May, we can actually see a downtrend, obviously a correction play out to the upside, and then obviously we are seeing another downtrend now. For those of you that actually like trading Elliott wave, so looking at the impulse and corrective phases of the market, this could potentially be considered as a corrective phase of pattern, which is called ABC. So what that means is basically when the market is actually topped up and started trending downwards, that we might actually see wave A unfold to the downside. Then normally wave B is actually considered as a corrective phase or counter move to the prevailing trend, and then we are actually seeing the last leg to the downside. So if we're taking Elliott wave into account, and if you actually have a look at the ranges of 1,900 to 1,975, we can actually see that that sort of scenario might be playing out right now. Also, one thing that we need to actually take into account when looking at the gold is obviously the fact that we are looking at the 50, 100, and 200-day moving average. So if you have a look at the line in green and blue, you can see that gold is actually past 50 and 100-day moving average to the downside, which is generally considered as a bearish move. Now, the next line that we've got here, the brown line, which is actually hovering around 1,896, or close to that support level of 1,900, we are actually about to cross potentially that 200-day moving average. What we normally find around these levels is if the gold was to come off, it could find support here. So it could actually find buyers. That's if you're actually looking for the upside or support level. However, if gold was actually to break that $1,900 level and go below the 200-day moving average, then they would be classified as a heavy bearish signal. Looking to the further downside, next level of support is around $1,800. Now, if you actually have a look at the flip side, and if gold can actually find consolidation or consolidate around these levels and actually start moving upwards, then if you're looking to actually go long on gold, one thing to actually consider is the major high that's been actually in place since 28th of July. So if gold was to actually consolidate here, if consumer price index was to soften up, or the numbers will actually come below what market is actually anticipating or expecting, that would indicate that inflation is cooling off, which would obviously prompt Fed or Jerome Powell and the US government to potentially put hold on rates. Now, if this was the case, we would expect actually US dollar to potentially start coming off, and we would potentially look at US Treasury yields as well, with a pure focus on 10-year yields potentially start coming off as well. These two indicators would generally mean that gold would actually attract buyers because investors or traders would actually not see much yield from the US dollar or Treasury yields, and that would potentially give a more bullish flow to the actual gold itself. So CPI is an important one to actually consider, important one to watch, because if the numbers came below the market expectation year on year, month on month, then we could potentially see gold gain some traction to the upside. Now, if it was contrary and CPI, consumer price index, year on year and month on month was actually to come above the market expectation, then that would obviously mean that US dollar would most likely actually gain a lot of strength, especially against the major pairs, and we could also see 10-year treasuries actually pricing out another 25 basis points over the coming months, which would likely make gold become a lot more dovish or bearish. For the bulls, if you're looking to the upside as well, because as traders we always look at the upside and downside, we would be looking at that $1,980 level as a major resistance level here. We would also look at that breakout of the previous peak on 20th of July, and if price was actually to appreciate that, then we could potentially see gold come up and test that all-time high. If you're putting that into percentage terms, then from the major high of 20th of July up to that $2,075 all-time high, we would be looking at potential upside of 3.73%. On the contrary, as traders, if we are looking at the bearish side and the gold was actually to break the previous trough on 29th of June and the major support level of $1,900, then the next level would be around $1,800. Now, the downside of that, if a trader was actually to take a short position, we would be looking at approximately 5.14%. So that's pretty much my analysis on gold, treasuries, and US dollar actually playing a big part in all this. Equities have been actually quite bullish as well over the coming months, so it is only normal actually not to see much interest in gold and silver, as gold is actually generally considered as a hedge against the risk. So we either need more volatility, more uncertainty, or we need Fed and all the governments across the globe to come back and state the facts, rates higher for longer, potential further interest rate rises over the coming months, and that could potentially add more volatility in gold. But happy trading. I hope you enjoyed this. If you do enjoy this and you would like me to actually have a look at another currency pair or another instrument next week, please comment on our YouTube channel and I'd be more than happy to look into it for you. Happy trading, and we shall talk soon.